everybody right around the world. You are here with James on behalf of Pivot Point Trading. What I thought I'd do in this specific video is answer a couple of questions that I'm receiving from people around the world in regards to a select four group of shares. These are Facebook, LUV, Cost, and also SBUX. From time to time, I receive emails on specific shares. There is a little bit of criteria that I want to go through before I actually spend time doing the analysis or performing the analysis on these individual stocks, one of which is that they need to be optionable for our own trading strategy. These four satisfy that criteria. They've also passed through earnings. So we are left with, in many senses, a blank canvas as to individual share analysis and also subsequent trading opportunities. So I'd like to take the time, first of all, to thank you for those email queries regarding these four particular stocks. I've also received a lot of emails from other people in regards to different types of stocks that are a little less sort of widely followed, and I'll respond to those individually through the email. I won't actually do that in a video presentation. I feel as though this particular video will help, I guess, the majority of people who watch this YouTube channel, because these four stocks, they are widely followed, and there is sort of actionable, sort of tradable opportunity on these stocks. I have gone through and had a quick peek at them, and there is a reason for selecting these four out of, you know, a number of stocks that I've also received as well. Now, before I move into the analysis, I encourage you, pardon me, also to send me any questions that you have in regards to the financial markets, the health or the state of the financial markets, and also individual stocks as well. It doesn't matter if you want to send me some questions about gold or silver, even the US dollar index. As long as it's chartable on my software in front of me, I can bring up the chart, have a look at it, and I can get back to you in terms of what I believe is happening on that individual chart, and just give you my general thoughts on what's going on. So I'd encourage you to take up that opportunity if you feel inclined to reach out. The email address is success@pivotpoint-trading.com. So without further ado anyway, let's begin this discussion with that of Facebook. Facebook has been something that I've been speaking about privately and also publicly for a number of months. It's something that we've had in the pro list in the past. We've sort of rotated it in, and we've also rotated it out. At the moment, it is out of the list, but we do keep an eye on it from time to time. And when there is tradable opportunity, we obviously take advantage of it. The most recent trade we had on Facebook was down here at 157.32. That was public on the YouTube channel. We had to close this position out prior to earnings. So you can see this big gap up, which we saw on Thursday 2 weeks ago. It left us with a relatively bearish candlestick, but the gap itself was bullish. So we sort of saw immediately a little bit of a mixed signal. We tried to push on back up. This was on the Friday 2 weeks ago, and then the week just passed. If I bring up the weekly chart for you, you can see that we're sort of left with that of a hangman type of candlestick at resistance. We closed down on the weekly chart, $2.83. Not the biggest of movements. However, most of the price action, or all of the price action over the past 5 trading sessions, was housed within the real body of the previous week. So that is relatively interesting as well. What it appears that we're doing on Facebook is that we're trying to fill this open window. So the earnings gap, which presented itself between the 26th and also the 27th, that was between a Wednesday and a Thursday, looks to be trying to be filled. On Wednesday, we pushed down intraday on this particular candlestick here. We tried to fill the gap. We didn't actually close the gap, so the window itself is still open. But you can see these lower wicks, which again still represent continued resilient buying pressure. Now, at this particular moment in time, Facebook is still healthy. Although we are seeing the beginning of a series of relatively bearish candlesticks, we are still structurally sound in the world of technical analysis. We're still a long way above the long-term simple moving averages. We're a long way above the 20 and also the 50. We're still holding above and bouncing off that rising 10 exponential moving average. They're obviously in a bullish alignment. Price is above all three. So it's looking quite good. Volume is there. It's expanding on the gap up to the upside. And this looks like a recent obvious breakout trigger that we saw above 157. This was prior to earnings. You can see how we were in some form of a little channel here for about 2 months, 2.5 months. We broke above it. And if we start bringing up also the ADX and the CCI, these are still relatively healthy. Now, the ADX has turned down. This is telling us the immediate sort of consequences of the current trend. And obviously the trend is to the upside, but with that ADX turning down, it's telling us that potentially the trend needs to rest. This is also in agreement with the pulling away from the top of the Bollinger Band. So when you see these two signals, you need to sit up, pay attention if you are in a series of bullish trades. Maybe you're in the individual stock short term, if you've bought Facebook stock, or maybe even potentially you've jumped into a number of calls prior to earnings. You've either closed them out or held onto them onto earnings or through earnings, and you've been rewarded quite handsomely for that. Right now, Facebook is moving into some form of a short-term consolidation. It's moving into a resting pattern. Now, often what will happen is that we will eventually close this gap. And once we close the gap, generally that's where that support level is going to show up and potentially give us that next buying opportunity for Facebook. Now, I've had a look at this in the pro class over the weekend. This is outside our top 12 list, but I thought anyway I'd make it relatively public, or make it public on the YouTube channel as well. What you should be doing now for Facebook is thinking about the trend continuation above 176.48. That's the best trigger at this particular point in time. It doesn't necessarily have to trigger this week, but what we may see over the next 5 trading sessions is to see this hit a little bit of turbulence, so to speak. It may even pull back down a little bit further, down to about the 164 area, but ultimately we'll be looking for Facebook to stabilize at most likely the 20 rising exponential moving average, and then in due course we can start considering bringing down this current entry at 176.48 down to a lower price, which is going to open up, of course, the parameters of risk and reward ratios, which is fantastic for us because, again, in the world of technical trading, it comes down a lot, firstly, to the analysis which you're performing to make sure that you're getting it correct, but just as important are some of these ratios, especially risk and reward and also money management. If you can get or understand these two subsequent subjects, you can really make some decent returns trading the financial markets over a number of fractals, and more or less indefinitely if you continue to obey the discipline and the structure which those risk and reward ratios and also money management principles will make you sort of follow along with. So what we are not going to do at this time is have a bearish trade set up on Facebook. The reason for that is because essentially it's counter trend, and you don't want to be shorting into the face of a rising market or a rising individual stock. It is relatively risky compared to that of the underlying trend. Now, if I zoom out and show you this, the trend itself is up. It remains up. And because of that reason right now, although we are relatively stretched, we are relatively overbought. Those oscillators are skewed short term because of that earnings announcement. It's still relatively foolish to be considering a short. So really, for Facebook right now, we are looking for continuation trades to the upside, and really the sale or the win behind this individual stock again remains that of the market. So as long as the industrial average, of course the NASDAQ and the S&P remain strong, then we would expect Facebook to inevitably overcome 176 and then run all the way up to potentially 199, which just falls short of that psychological round number up here at $200 a share. We'll start looking at the actual risk on the trade itself once we get closer to an immediate trade setup, but at a minimum it have to more or less go at about 169 at the current market price for Facebook if you were to break above roughly 176. So what I'd like to do also is continue the discussion into Southwest Airlines. The ticker symbol for this company is LUV. Now, the reason for this is because it has been relatively volatile recently. We've seen gaps, or at least a major high wave spinning top about a week ago. This was earnings related. We're still within this candlestick here, but generally what we do with these types of candlesticks, given, of course, we can see the volatility housed within that one single day's worth of trading, is that once price pierces above or either below this particular candlestick, it is either a reversal or a continuation type of entry. Now, it's a very simple trade setup, but what I want you to do is pay attention to the price action. Most likely, we're going to get stuck in between sort of the parameters or the perimeters of this individual candlestick. But once we shake above or below this is where that next trade is going to stem from. If we break above 58.82, we should run all the way up to about $63 a share on LUV. I'll jot this in for you. You can see over here, 63.23. And also on the downside, if we start cracking below 53, there's a good chance we will move all the way back down to about $48 a share. So let me just duplicate this. I'll bring the trade trigger down, but you can see down here, this is macro support. We also have a gap very close to it, which has set off this most recent rally up to the peak over here at about $64.50. So it is, relatively speaking, a bidirectional trade setup. There is no immediate sort of come Monday trade, but if you monitor this and pay attention to, again, the top and the bottom of the intraday range of that earnings candle, this was on Thursday 2 weeks ago now, you should see a price continuation either above or below that parameter point of price. Let's move into COST, ticker symbol COST. This is Costco, Wholesale Corporation, otherwise known as Costco, obviously. What we're seeing right now is the retest of this trend line. So if we go back and have a look at this, this is dating back to the lows of the GFC in 2009. This has been in an up market, or in a bull market, really for about 8 years now. It hasn't really known any other direction other than short-term pullbacks into the prevailing underlying bullish trend line, which has provided a number of support opportunities throughout this bull market advance. Now, interestingly enough for Costco, it wasn't until the month or late month in July where once again we started to interact with the support area down at about 148, 150. What happened? We bounced immediately. We're seeing a short-term pullback. What may happen for Costco right now is that we may be setting up some form of a double bottom or a little triple bottom around this macro support area. What makes this interesting is that we've identified the bullish uptrend, which is very pronounced. You can see this is the monthly chart of Costco as it has appreciated very strongly in value. We've seen a little bit of weakness Thursday through Friday. You have this outside day candlestick on Thursday, a little bit of a continuation on Friday. It looks as though we're trying to find resistance at that declining 50 exponential moving average. However, the exponential moving averages, they need to work in agreement with both the macro trend and also the intermediate trend. So it's very important that you understand what fractal we're working on, and then obviously how as on the minor level of the molecular level as technical swing traders, how this all fits together in terms of the broader and bigger jigsaw puzzle. So short term, Costco looks as though it's going to pull back down to about 150, but this is offering up potential and tradable opportunity. As it pulls back, you're going to see these oscillators move back down into probably more so neutral territory. You can see also, if I go to the weekly chart, that we're relatively oversold. Now, this is adjusting for the move that we've seen in price from 180 all the way down to 150. So this is about a $30 write-off we've seen over the past 6 months for Costco. We're relatively oversold on the weekly chart. If we go back to the daily time frame, once these adjust and if we see this pullback back down to 150 and you start to see bullish candlesticks set up in this green box, I've highlighted this green box because it's very important. There's a very high probability that we are going to run all the way back up to 170 and also all the way back up to about 180. So this trade has a lot of promise behind it. What I can simply do is put in a trigger here. If we break above 162.80, this is going to be a very strong continuation trigger, again up to these above mentioned levels at 170 and also back up at about 179, 180. So let me just duplicate this and let me drag it up for you so you can see this for yourself. All the way up at 178.18. So this is the immediate game plan if it does decide to play out this way. However, what I feel in terms of a hunch or a suspicion is that we are going to pull back. We're going to stabilize at support. And if this is to play out, we're going to, or at least it's going to offer you a tremendous opportunity in terms of reward risk. So think about this. If you were to enter at 152 or 150 and you had maybe $2 of actual risk on the trade, if you place your stop down here at about 149, $3 maximum of risk, and then you had your profit potential all the way up at about $180 a stock. To me, that's about $28, $29, $30, $31 worth of reward. You're looking in the vicinity of about a 10-to-1 risk-reward ratio if, in fact, Costco pulls back down. Now, that isn't a sure thing. That isn't a guarantee, but it is certainly a possibility that you should be keeping an eye on. So really what we're doing right now for Costco is that we're sort of stalking this trade. We've got an idea of what to look out for. It's just a matter of, well, is it actually going to happen? Now, it is a little bit concerning, I must admit, up in this top area. It looks as if we have a reversal gap over here. We have an island reversal, which is a very bearish signal as well in terms of chart patterns and sentiment and psychology, followed by a subsequent island reversal. So we've got two island reversals followed by, or at least, and before that, one reversal gap. So I mean, this is looking quite weak. It has sold off tremendously, but we are short-term oversold. So Costco is really at that inflection point as to whether or not we are going to see the continued advance of this bull market off from this trend line, because if it is going to happen, it's going to happen off from this point, or whether or not we're going to ultimately break down below this level. If that is to be proven true, we want to see Costco definitively move below. Now, let me just bring this up on the weekly chart for you. You want to see it move below this swing low towards the end of 2016. This is where we saw a one white soldier candlestick set up, and this is what kicked off the bull market, or the move, or the subsequent move from 140 all the way back up to 180. So it is relatively interesting to set up on Costco, but at the moment we can't really pay too much attention to the bearish opportunity on the trade. It's more so the establishment of what looks to be a pretty healthy bullish trade. Now, to finish with, this is StarBucks. StarBucks is something we have also followed in the past. It is very disciplined. It behaves quite nicely. It is a stock that I've been quite fond of in the past. It's something that I've sort of fallen out of love with over the past number of months for no real reason other than I've just had ample opportunity in our pro list, which has sort of kept me quite occupied. I look at StarBucks from time to time, and this is quite interesting because very rarely do we see any real weakness in StarBucks. But what we have done very similar similar to Costco is that we have sort of retraced. You can see up here we're $65 a share. We've come all the way down to about $53 a share over the past 6 or so months. Now, we're back at macro support. So first of all, I want you to note that we are very close to a macro support. When I say macro support, think about the US dollar index, where the US dollar is currently trading. Very important, the parallel between these two, because what that is effectively telling us is that we do have limited downside down to about this 52 area, but we do have tremendous upside if we can stabilize around this price point down here. Now, we've obviously seen the reaction to earnings. It was a significant gap to the downside. This looks like a bear flag, so it does look as though we are going to break once again to the downside. But what I'm trying to say right now is that any movement back down into this macro support is most likely going to be met with as a potential for people, or an opportunity for people to actually look at this as a rather strong buying opportunity. It might take a little bit of time to play out. Immediately right now, SBUX looks weak. There's no sort of discounting that. It is exceptionally weak. It looks like a bear flag. We've got, again, some form of a continuation gap to the downside. This is not a reversal gap because we have seen the turn take place prior to the gap moving to the downside. It just looks as though we're very close to, first of all, macro support. Once again, if I bring up the oscillators, you can see that we are rather oversold on the daily time frame. Again, we're moving into oversold territory on the weekly time frame. And often, if you go back in the past and check this in history, when we get down to these price points, it is often a turning point for SBUX. And again, very similar to the previous stock we looked at with Costco, if you start looking at this potentially as a buying opportunity, given some additional information in terms of price action, candlesticks, chart patterns potentially, well, then we're talking about risk and reward ratios, and also a lot of, outside of risk and reward, also is that just the technical picture itself is starting to form as a really nice trade all the way back up to $65 a share. So at the moment for SBUX, what you should be looking for, again, very similar to Costco, is to see price sell off to come down to about $53 a share once we break out of this bear flag. If that happens, I'll bring you another YouTube update and we'll start looking at this more aggressively or constructively with the candlesticks that we have as to immediate trade opportunities. But this is something that you should keep on your radar. There's also the possibility that SBUX rallies, it closes the gap up at 58, and then it does something like this as well. It comes back down to 53, but ultimately sets something like this up all the way back up to 65. Right now, it's a little bit premature, but it certainly is another stock that you should, again, be focusing on, following along very closely with, and again, I'll bring you that opportunity when it truly presents itself on SBUX. I think that's all really I wanted to speak about. There were 4 particular stocks, 4 individual stocks: Facebook, LUV, Costco, and SBUX. If you have any questions or any other stocks, please message me, send me an email, and when I have a few requests, I will actually do another recording identifying, working through those individual stocks and giving you my thoughts on them. Okay, it doesn't really, I find great joy in actually doing this because, again, it works well for you, it works well for me. And again, above all else, I can really share with you how to break down individual stocks or markets or whatever sort of tradable asset vehicle it is that you're looking at through the eyes of a chartist, which is most important. So on that note, everyone, enjoy your weekend. Send through any questions which you may have, and I'll be back with you for the week upcoming for some more market updates. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.